Hello, welcome to episode 6 of the Dreams to Realty Property Insights podcast. I'm Sage, your host, and today we're going to be myth-busting some of the things that you hear thrown around when you're discussing property, perhaps at the dinner table or when you go to visit properties or when you go to talk to real estate agents or your friends who've been in the property journey, because it doesn't take much for people to start to think that they're experts in the property game. You find that most people, even after one purchase, start to feel like they know a little bit of something about the whole journey. But the market's so dynamic and is constantly changing that what they knew at the time to be right may not exactly be right for you as you enter your property journey. And that's why I discuss topics that come to the forefront, are in the news, with experts like Susan Farquhar, the Managing Director of Cala Property. Today she's going to join us again and help us to bust some of these myths with her decades of experience in the industry. So looking at some of these myths we'll be discussing, have you ever heard, don't tell your real estate agent what your budget is, sort of skip around that, dance around that question, and don't exactly tell them your maximum level. The other thing is, don't buy an apartment, it doesn't increase in value. Susan will be able to give us some great insight on that one. What about buy blue chip? It's better to buy the worst house on the best street than to buy in a suburb that's lower in price value. Don't buy off the plan. People constantly saying that, but there's pros and cons to that too. And don't pay lender's mortgage insurance. Don't fix your interest rate. There's a rate cliff approaching. There's all these words and phrases that get thrown around by people who aren't exactly savvy or experts who are dealing with the property industry every day. Now let's get Susan up to the stage and see if she can help us to bust some of these property myths. Now we've got Susan joining us to help us bust some of these myths, these property myths that we hear being thrown around the dinner table and the real estate agent's office when you enter there. And guess what? They can sense when you don't know and you're new and you're a newbie and you're fresh and green. And well, I don't know, it's better to feel confident, I think. And I think buyer's sentiment's another thing that can affect the market too. It'd be interesting to discuss that with Susan and see what she thinks about that. Hi, Susan. Thanks for joining us.
Hi, Sage.
Hey there. How are you this week?
I am very well, thank you. How are you?
Not too bad. I am in sunny Marrickville in a different room this week. Are you back in Sydney?
I am, yeah, much colder than I was in Yeppoon, that's for sure.
Wow. Bit of an extended working holiday from the sounds of things.
Yeah, exactly.
Great. Well, Susan, I'm so glad you could make time to join us again because we really are in an interesting time. A lot of people are saying that the market could be rising to reach a peak towards the end of the year. I'd love to hear your insights on that. Do you have anything to add?
Yeah, I think it's this is an incredibly good time to buy if you have the opportunity to. We saw that when the RBA held rates just for that 1 month, every property market in Australia flooded back. So to me, what that shows is there's still a huge appetite to buy property in Australia. There is a massive undersupply of property. We're expecting, a huge wave of migration to come. And the question that everybody is asking is where the hell are they going to live? We're starting to see a little bit of a correction with trades. So hopefully that will help a little bit, but we have delays across every aspect of it. So if there is property available to buy now or in the near future, even to build, it's a very, very good time to secure that property and secure those prices, because I think it's not going to take much before those for the market to really, really increase in value.
That's great. It's great that you have confirmed that for us. It'll be interesting to see actually what happens. I think we've seen now 3 consecutive rises in the property market, and the interest rates also have risen just this month to reach about 4.1%, but so have the wages. However, compared to years ago, I think house prices are still way above our wages, maybe 5 times or more our wages. How does that affect people's borrowing, Susan?
It's a lot more times. The multiple is much greater than that. I don't know what it is as an Australian average, but in Sydney, it's at least double that. I think the other thing that has changed enormously is our ability to live anywhere in Australia with a lot of jobs. A large proportion of jobs now are conducted by people who can be more nomadic because of the digital aspect. So the e-change, as I like to call it. So we've seen a massive push, people moving from into Queensland, people moving into more regional areas, and there's a lot greater affordability in those regions. And there are very few markets in Australia that, even though there may have been and there have been declines, I think they're all pretty much going to benefit around the same time of increases. And it's interesting too with the immigration laws. What used to be considered a regional town has expanded enormously. So it pretty much used to be that a regional town was anywhere that wasn't a capital city or a major regional hub. But now pretty much every town in Australia is considered regional, I think, except for Sydney and Melbourne. So that means that if you're coming from overseas, you can live wherever in Australia you would like and can afford.
I think some core logic data shows that over the past 12 months in regional New South Wales, the rent has increased by 3.8%, which puts median weekly rent at about $550. So, that's difficult for people living there, but I suppose it does offer an investment opportunity depending on your strategy. Susan, can you please help us to understand what's going on? I think there's a bit of discussion about rent caps. From an investment perspective, how does that affect your clients if a rent cap was to go through?
Enormously. A rent cap would be, or any kind of rent. Look, I think having maybe rent control is a fair thing, where maybe rents can only go up by a certain percentage every year, or with the existing tenant in place. But there are problems with that as well, because if there is a rent cap and the investor wants to get more rent because they know the market will support it, then there's a real case for discontinuing a lease, and that will create a lot more uncertainty, not more certainty. So there are pros and cons for each. From an investment perspective, it probably won't stop investors investing in property, but the way they go about achieving the returns that they require from both the cash flow as well as the growth flows will be done in different ways, and not in ways that will necessarily be fairer to the tenant. So it's a bit of a Band-Aid solution. And I think, I've mentioned this before, that investors provide a lot of housing in Australia that the government is not providing. A lot of people who are renting can't afford to buy property, can't get a loan. They provide a very, I'm a bit over investors being demonized, right? They actually play a very important role in our society for providing housing that the government doesn't provide and that people couldn't ordinarily afford. So I think the government needs to be very careful about imposing those kinds of things. I think when there's a state of emergency or some major event going on, like a pandemic, it makes sense that there are going to be some changes to laws that stop even more unrest or a greater threat of the pandemic spreading, because the people are going to need to move, right? All of those measures, the health measures that were in place during the pandemic, were about restricting movement and restricting the virus from traveling around the country. So we don't want to start that trend by imposing various things that are unfair and maybe not really necessary anymore. And I think another side of this that hasn't been really spoken about very often is when it comes to inflation and everybody keeping a cap on inflation, one of the measures that is being or levers that is being pulled by the RBA is obviously the interest rates. So does that mean that people who own investment property should be the only ones who are responsible for, buckling down on their spending because their payments have gone through the roof. It makes sense to me as a social democratic society that pain is shared throughout, and it makes sense that that pain is somewhat shared with the tenant or everybody, right? So, I don't think that's going to be a very popular thing to say, but I think it's an important thing to say. It shouldn't, there is this myth that investors are this wealthy segment of society, but they're not. They're really, so there is a section of society that is very wealthy who are investors, but the majority of investors are just mum and dad investors. So should they be burdened with both their own mortgage payments and then their investment portfolio increases of payments? Surely it's fair for them to be able to pass those that cost down to the tenant as well.
Thanks, Susan, for sharing your perspective on the situation. I have heard, opposing opinions on that. Whenever I hear someone saying investors are great and they're building the market, then I also hear academics saying, it's the investors' fault that has pushed the prices up and making it so unaffordable and making it difficult for people to enter the property market now. But I believe even back when property prices were much lower, $3,000 deposit was still difficult for people. That was still thought of as expensive back in the day because it was that's how it related to wages growth at the time. But I think Australia's been lucky and has seen a lot of economic growth over time, and that's put upward, not pressure, but has raised the prices of the land in Australia, which is great. And just going back to what's happening with the rental issue at the moment, I think Chris Minns was quoted saying that he's actually not for it. It puts pressure on new entrants and builders coming to the market, he's quoted saying, and supplying households for the people of Sydney. We could make what is a desperately bad situation worse by putting rent caps on, is in his opinion. And he is thinking that a portable bond scheme would be better. So that's probably the way we're going to go.
Yeah, that makes sense. Making bond easier. Look, I think there are other options. But the reality is that the rental crisis or the housing crisis should be squarely put on the government for not releasing enough land with the predictors all of the predictors that we have in place for population growth. It's appalling. The government could have easily released more land, could have easily rubber stamped a whole lot of other, things in that entire supply chain a lot faster. I was talking to a builder this morning, actually. I had a meeting with him just before about a property that has been completed on the Sunshine Coast, right? That will provide housing for about 40 people. Now, that whole region is it's so tight. And this is relatively affordable apartments, right? And it is completed, totally completed. And for 3 months, they have been waiting for the occupancy permit, right? It's completely done. They just need someone. They haven't even had somebody come out on site to see the apartments as completed and go, bang, yep, certificate of occupancy, off you go. It's now sealed. 3 months, right? So that's just one example, right? There are so many examples where the government could have put on more people, and apparently they have been employing more people to help with this kind of stuff, but I'm not seeing the effect of it. We're seeing other properties or other projects that have been in the pipeline for a really long time that should have gone through a year and a half ago, but haven't because of some ridiculous red tape. That's what the government should be looking at if they really want to solve this crisis, because I'm not saying it's going to be easy, but it could be a lot less hard if it was looked at every aspect of the supply chain or the ecosystem. I'm not talking about the supply chain in terms of literally the supplies involved in building a property, but the whole ecosystem, from releasing the land to doing the civil works to, getting engineers on site, everything all the way through to, the certificate of occupancy and then, rectifying minor defects and stuff. So there are a lot of different areas, little inflection points that could be done so much better that overall would have a big effect on the ability to get these houses to market a lot faster.
Thanks, Susan. I think your Cala Air strategy is focused on that region at the moment. Is that correct?
No, the Cala Air strategy is in a number of capital cities in Australia on the eastern seaboard, but that's a really good example actually where we've got apartments that have already been completed that will provide housing. Actually, the really interesting thing is that, Cala Air leverages the algorithms of, the short-term stays like Airbnb, bookings.com, stays, etc., which sounds like it is geared mostly towards the tourism market. But in fact, it's also being used by insurance companies for rehousing, for NDIS when they're waiting for properties to become available, because there's quite a wait list on that. It's being used for new migrants coming into the country that can't find housing and also don't have jobs yet, which makes it very difficult to get a house, because how are they going to provide any security? So this is exactly what you're talking about with the portable bond scheme. Why not have these things already in place that show that they are of good character, they've been brought across for their skills, and it's just a matter of time before they get a job, right? But we're even finding that, right? We're even finding that aspect of it taking a lot longer than we expected, from the time an expression of interest gets signed to the time we get occupants in the property, because there aren't enough lawyers to do the legal work up front. There aren't enough credit assessors and mortgage brokers to do the mortgages for clients. Then there aren't enough valuers to do the valuations for the banks to approve the lending. Then once the client is ready to go, there aren't enough independent building inspectors to do the minor defects report. So normally something that should take 3 days to book in is taking 4 to 6 weeks. Right, this is huge, and part of working with Cala Property is we're finding solutions for all of these, and we have, so that we are tightening this process. But we often don't see that there's an issue until we get to it and go, oh wow, okay, we weren't expecting that. Even things like booking the lift to take the furniture up to the apartment to furnish it, we have to book in 6 weeks in advance, because we've got to get somebody on site to approve it, to put up the curtains to protect the lift. It's ridiculous, right? Delivery drivers, furniture assembly people, commercial photographers. There's every single point in this that, and at least our clients have the advantage of working with Cala Property for us to manage that entire process, because trying to do that on your own, I think, would be incredibly difficult. But yeah, you're right. It does, it's a really good product type that caters for so much more than your standard, holiday, tourist, that would typically stay in a hotel. This is providing different kinds of accommodation that Australia's never really needed before.
Very interesting that you mentioned that, because I think a woman has been bitten by a funnel web spider when living in her shed while her property was being constructed. So people really do need these places to live. It sounds like a joke, but you're really helping out in a great way there. Susan, now moving to the Sunshine Coast, or, you'd think that your rental yield, how does that relate to, say, living in Brisbane? Is that, how do you look at it as an investor, and would you consider price to income ratio or purchasing power index when looking at something like that?
Okay, there's a couple of questions in there together. So when we're looking at the rental yield, we're really looking at your return on investment from a cash basis. So in Queensland, and it's more nuanced sorry, it's not quite as nuanced as Brisbane and Sunshine Coast. It's more Queensland as a whole. But it can also be capital city and regional. So generally the capital cities are lower because the growth is higher. There's an inverse correlation between the rental yield and the capital growth typically. And in regional areas, you're going to get a lot more rental return, but you will have lower growth. Although we're starting to see that change and for those to come into alignment. Typically what we've been looking at is, say, you know, an 8% capital growth in the first couple of years and say a 5% rental yield as our balance. But that really does exclude us from a place like Sydney, which is generally okay because Sydney is so much more expensive. And for our investors, we're more likely to say to them, look, instead of investing in one property worth, you know, $3 million, why not buy 4 properties that'll give you that rental, give you that investment portfolio, and that will diversify your your growth risk and your cash return risk. So, but yeah, basically when we're looking at the rental yield, we need to understand what the coverage is going to be on the interest, because if you can't afford to hang on to the property, so if you don't understand the cash flow on the property, it doesn't really matter what the growth is going to be if you can't afford to hold it, right? So let's just say, for example, that you've bought a property worth $500,000 and you're going, wow, $500,000 for a property, that's really great. But if you're only getting $300 a week rent, and that's around, say that's around a 3% rental yield, right? So you're getting a 3% return. Your interest rate is likely to be, let's say, even 6%. There's already a 3% deficit before you've taken into account council rates, property management fees, and potentially strata costs, right? So that's what you need to take care of, and you need to be particularly mindful of that in a high interest rate environment. And while it's a really good time to buy in terms of the capital growth potential, you still need to make sure that you're going to be able to afford to plug that deficit for the next couple of years while we're waiting for those interest rates to come in lower. So, you know, when we do the cash flow for our clients, we look at it per week and we go, right, this property is going to cost you $50 a week to hold it. Can you afford that or not? And look, if you live in Sydney and you work in the city, you'd be like, yeah, whatever, $50 is like is a round on not even a round with my mate on a Friday night, or, you know, a couple of lunches I don't have to pay for. Like, it's not a big deal for people to make that adjustment. But if it's for, you know, say a family that have a couple of kids in private school and it's a $300 a week deficit, maybe not. Right. And again, this is where the Cal Air product comes into play, because it's sitting at around a 12% net yield, right? Not gross yield, net yield. So that means that these properties are earning our clients a significant amount of money per week.
Thanks, Susan. I think last time we met, you mentioned the property clock, which is really interesting. And I think the property clock's not always the same with apartments and houses, are not always the same state to state. Where do you see that we're at the moment with the property clock? I think you mentioned that it could all be rising. Are you seeing the market correct? And do you think the cost of rent is directly correlated to the price of property, please?
Okay, is the cost of rent directly correlated with the price of the property? No, there is a kind of a benchmark yield per capital city or region that you should be looking for. Not always, it doesn't always conform. It's not like it's a static number. But, you know, in Sydney, the more expensive the property, the less rent you're likely to be getting for it in terms of a rental yield, unless it's like well, even if it's a luxury property, that's still probably true, right? So, for example, when I was living in Coogee years ago, the property was worth around, say, $2.5 million, close to $3 million, and I was paying $1,100 a week rent. All right, so that's, if you think about $3 million, I should have been paying $3,000 a week rent for it to be even, close to covering, right? So massive deficit, but huge growth potential. Okay. So, so it's not always a direct correlation. And sometimes that's where it's better to play in that safer middle ground place, because that's where the most demand is as well for properties. So not the crappy little studio apartments, because very few people want to live there, not the high-end expensive places, but that sort of middle ground type of property that's going to have the most market rent, most market appeal, and then you'll get the best kind of yield. In terms of the property clock, where are we now? Well, some markets like Perth is, close to the peak. Adelaide's just gone past the peak, but a couple of areas are still in huge demand. They're very generalized it's very general when you answer that question, because within each, even in a declining market, so, Melbourne has been in a declining market for a couple of years, but we've had clients that have still earned $100,000 on the land component alone on properties that were worth $620,000 when they bought it a year ago. So the land's not registered. A couple of them have said, hey, what do you think my property's worth now? And we've done our market analysis and it's come in at around $100,000 more. And they're like, wow, that's crazy. Like every market's going down. I'm like, it's actually not. And that goes back to the research that we do and, really pinpointing those areas for growth and really where they are on the property clock. But in terms of Sydney as a whole, Melbourne, and Brisbane, they're all going to follow suit pretty much around the same time. The answer really is in the interest rates. Okay, as soon as the interest rates go down a little bit, those markets will come back really, really, really strongly. And the research the economic research that I have done on interest rates would indicate that interest rates will probably, if I'm being quite pessimistic, go up, say 50 basis points by the end of the year, but should start to come down next year. We should have pretty much got inflation under control by then. So next year they'll start to decline, and the second there's a freeze or a decline, that's it. The markets will come back in really full force and very strongly. And I think they'll skip from 6 to 9 in a year, and then it will be a very, very bullish market.
Thanks, Susan. Yeah, we've seen quite a few of the bears hide away back in their caves regarding the real estate market recently. But in your opinion, I know we hear a lot of opinions being thrown around, but just to help people take control of the investment process or the investment journey, do you think it's more important when you sell rather than when you buy, if you're going to try and time the market?
Look, no, I think when you buy is probably the better time to time it. When you sell, hopefully you've been able to stay in the market for long enough that it's not going to make that much of a difference overall from the time that you've had help started to own the property. But no, I think when it just depends too whether it's for your own property or like to live in, or whether it's for an investment. I always say that when it's your own property, all of that stuff doesn't matter. It kind of goes out the window. Buy what you can afford when you can afford to buy it in a place where you can, stand living or you want to live, right? But when it comes to an investment, look at the numbers. So kitchens, not cash flows, is what I always say to my investor clients. But when you're buying your own property, you need to be able to afford it, but the bank will have already decided that for you. Look at the kitchen. That's what we're going to be cooking, and the bathrooms and whatever else is important to you.
And I suppose that comes in, your tax rebates and things in regards to depreciation and interest-only loans, depending on your investment strategy, could also have an impact of the prices going down. Do you think that has a huge impact or not?
What's that going in? Incentives from the government has an impact on prices going down?
Yeah.
No, it has an impact on prices going up. So stamp duty is often used as an incentive to entice investors back into the market. I've especially noticed this is true in Victoria. Victoria has really expensive stamp duty. It's the most expensive in the country, sitting at, I think it's 5.3%. So yeah, very expensive. And I have seen that down to zero for investors and also halved for investors. So that's a way of enticing investors into the market. Usually it's only applicable on new property, and it's about spurring on the construction industry. But yeah, I don't think anybody needs to do that at the moment. So I can't see that happening, but it does work, right? It really brings people back into the Melbourne market. But yeah, no, I don't find that any incentives, like it's the availability of money that will bring the market back, and the restriction of money that will tighten the market.
So what about the recent headline that 25% of mortgages, I think in Sydney alone or in Australia, don't quote me on that, were bought with cash? So that just shows that how much the baby boomers obviously have and are buying properties outright. Do you think cash is always the best option?
I think actually a lot of that has to do with the foreign markets. For the first time, Europeans have overtaken Asians for foreign investment. But no, I rarely think it's a good idea to buy property with cash unless it's your own property. But even then, start investing. One of the reasons why property is such a wonderful asset class for Australians is because of our ability to leverage it. So you only need to put down 10% in most cases and get the rest of the money from the bank, but take all of the profits in the end, because all you have to do is pay back the interest and pay down some of the principal as well, depending on when you buy it. So, or who you're buying with. So, yeah, I don't think it's ever a good idea to buy property with cash. However, I do think it's a good idea to keep the debt in play in your investment properties and pay down your home loan as soon as possible, because A, it's really nice to have that security, but B, it's not very useful debt. It's not tax deductible. So leverage the investment properties as much as possible.
And correct me if I'm wrong, but I think the jargon they use is called having geared investments when you have a mortgage against your investments. Is that correct?
Yeah, I mean, gearing is also related to the tax deductibility of that mortgage. Yeah. So, and that's true for an investment, not for owner occupier. So you can have a mortgage against an owner occupier, but it's not geared, right? Because it doesn't relate to the tax structure.
So, just going back to the fact that some people are buying their properties outright, the cost of living in some places, like even smaller cities, Adelaide apparently, and you know a lot about Adelaide from your work there with the government, has quite a high cost of living comparatively. I got this stat from Numbeo, a data aggregator online, so I'm not sure exactly how accurate it is, but it showed Adelaide to have a cost of living of about 90%. It compares to Brisbane of about 80%. So yeah, I mean, Adelaide's house prices comparatively are sort of mid-range, is that correct, out of the whole of Australia?
Yeah, they're pretty good actually. Adelaide house prices are pretty good. Look, I think there are more factors than the house prices when we're looking at the cost of living, even though buying a house and, paying for a house is a big expense. It's also the cost of food. I remember when my dad had a cafe 100 years ago, 30 years ago. I was in Brisbane and I was reading an article on the average cost of a cup of coffee in every capital city around Australia. And Adelaide had the most expensive coffee. Back then it was $3.50 for a cup of coffee. Now we're paying like $5 and $6. But yeah, it's, housing is just one aspect. Transportation can be a lot more expensive and a lot a lot less good, if you like, if that's English. Yeah, like where people, instead of people using public transport, they're more likely to run the cost of a car, which is an expense, especially with petrol prices as high as they are, and Adelaide's relatively spread out. So I think the other thing to keep in mind is that, goods and services can be a lot more expensive as there are less options and it's a smaller economy, and income levels are lower generally with less employment opportunities. So there is a lot more to take into it. In fact, I've got a number of Adelaide clients, and when I look at what their incomes are compared to the jobs that they do, I'm always surprised, and I always think, wow, I don't know how you would live on that in Sydney. So it doesn't actually surprise me, because when I go down there as a tourist, I don't see that Adelaide is particularly cheap at all. If anything, I think it's quite expensive to eat out and to go out. So if my wage was a third of what it is and I'm still paying those Sydney prices, I find actually in Adelaide, we've got quite a lot of friends down there, and they tend not to go out as much. They tend to do more things at home, or cheaper options like go to the festivals or have barbecues, that sort of thing, because it makes more sense. Whereas in Sydney, everyone's so tired and busy, like we can't be bothered cooking, so we're just going to go to the pub for lunch or, whatever. But yeah, I mean, we don't have dinner parties in the same way, I don't think, as a lot of other places. So, and also often our houses are a lot smaller, or our dining rooms aren't as equipped to have 10 people around, but you want to catch up with your friends. So yeah, that actually doesn't surprise me at all. I feel like the wages are really low in Adelaide comparatively. But in Brisbane, they're not. In fact, the average wage in Brisbane is $200 a week higher than Melbourne. Yeah, and 98% of that of Sydney. So very comparable to Sydney, but higher than Melbourne. So that's interesting. So it wouldn't surprise me that Brisbane is actually quite affordable.
Queensland sounds really supportive of new startups as well, from what I've heard. Like, if you want to start a business, they've got a lot of incentives available for people to move up there and start their businesses. Susan, today's been great. I've really enjoyed the chat today, and we've actually covered a lot more than we usually do in the short span of time. We're getting a little bit more used to talking to each other and unpacking the data. But as we reach the end of the list of questions that I prepared, tell us about the buyer's agents and how people should address purchasing properties all over Australia. Like, I know you've got a concierge as part of Cala property itself. Could you tell us, can any buyer's agent buy your property all over Australia?
Yeah, so we're not a buyer's agent. We're property investment advisors, and we kind of hold a relatively small space in the industry. A buyer's agent, they're people who you pay around $15,000 as a base to find you a property. Now, I think there's a real benefit of using a buyer's agent when you're looking to buy your own home, because I see that a buyer's agent's value is really in having a small, geographically defined area that they operate in, have very strong relationships and good off-market options, right? So say they've got a client who wants to live in, Marrickville, for example, then they engage a buyer's agent who's familiar with Marrickville to find them a property in that area, and can leverage the relationships that they have with other agents and also with their own database of people wanting to sell. So instead of getting paid by the vendor, right, they get paid by the purchaser, right, which is structurally different to your standard real estate sales agent, okay? And they're not, I don't think that they are particularly adept at selling properties all over Australia, or buying properties for you all over Australia. Certainly not what I've seen, certainly very opportunistic, and I understand why they might want to try to do that. But I see a lot of buyer's agents who are looking at, say, buying in Sydney and Brisbane and Melbourne, but then they sort of move into the investment space, and I can't really see how they're qualified for investments. Now, the reason why I say that is because when you are the buyer and you engage a buyer's agent, you have a list of things, right? So you go, right, my budget is $800,000. I'm looking for at least 3 bedrooms. I really need a garage, and I want it to be close to public transport and in this school catchment area, right? Now, that's what a buyer's agent is very good at doing, is meeting your shopping list of what you want out of a home. But I haven't really met an investor who can do that, right? They might say, I want good capital growth, or I want good cash flow. There is just so much more to it, right? And someone like us who are, property investment advisors, I've created a research methodology using hundreds of data points to consistently identify the right property in the right place at the right time, according to my clients' budgets, strategies, and structures as well. So being able to work with that level of complexity I haven't met a buyer's agent who can do that, right? But I have qualifications in financial planning and broking and an MBA, and I've written a thesis, so I understand research very well, and that's why I've won so many awards for what I do, because it's a very unique space. So. I think that you have to be very careful about engaging in a buyer's agent for an investment property. I would argue whether they're qualified to actually do that for you. I think I think where that can differ is if you go, look, I know that I want to live on the Gold Coast when I retire. I know that this is an area that I like. This is a kind of property that I might want to live in when I'm older. And for now, it's going to be an investment property. So, until I get there. So, can you go and find me something like that? Yeah, sure. Not that difficult to do. So, I don't really think, buyer's agents may say that they can buy properties all over Australia, but I would be very careful about engaging a buyer's agent to do that for investment generally, let alone all over Australia. But I think if they're a buyer's agent who is a genuine buyer's advocate for home buyers in an area, and you happen to be an investor who wanted to invest in that area, well, yeah, that would make sense. Okay, well, you've had a lot of luck buying properties in Marrickville. I think that would be a good area to invest based on my own research, and that's as far as they want to take it. No problem, But it's a lot of money. You're paying, 10 to 20, in some cases 50,000, depending on the value of the property that is recommended to you. Is that really a necessary cost when, using the services like for someone like Keller Property is under $1,000, so, and with a lot more qualifications. So I just be, buyer beware kind of thing. It sounds like it's a nice title, but unless you're in the industry and really see the difference between the different kinds of roles, maybe not. Yeah, I've actually got an article on my website, actually, on colourproperty.com.au that I think is going to get published maybe today or tomorrow about that. So that's probably a good one to look at for a bit more information on that.
Thanks. I'll grab that link from you and put it in the bottom of this episode, actually. And really interesting what you mentioned about Europeans now rising up above foreign Asian investors. I think there was a legislation that actually changed that people overseas, it's now more difficult to buy property in Australia for people overseas. I think they'd rather more local investment in there. But from the stat you gave me around COVID with all those empty houses and no one using them, and and there was a high number of people looking for properties, I think in one of our first episodes, that's just ridiculous. And if there was a way to utilise that, like your Colour Air property strategy, I don't know, it could just offer so much social good in so many ways.
Yeah, totally. I mean, a million empty dwellings in during that census night. So I'm sure a lot of those people will have come back. They might have just been people who got stuck overseas or had gone overseas for a year and couldn't get back when they wanted to, but certainly not that much of a percentage of that, you would think. So yeah, it's interesting, isn't it? Like I just, again, that's where I think the government would be better used, right, is to tax those dwellings at a much higher rate, or ensure that they are available for disaster victims or, people to help solve this housing crisis that we have. To me, that makes more sense than putting a rent freeze on and dissuading investors from buying property when we don't have enough dwellings as it is, So surely there have got to be better ways to solve that problem.
Thanks, Susan. Your property investment's definitely been tried and true, and naysayers and people who are against it, I mean, they keep us thinking about why it can be so useful and good for people to break into the property market sooner. But there's a lot of positives there, and I guess people can come to you and make an appointment if they want to find out more how their financial situation can benefit from property investment.
Yeah, of course.
Excellent. And that website again was colourproperty.com.au, and I'll put a link in the bottom of this episode as well. Thanks, Susan, so much for joining us. Was there anything you wanted to say as we close off?
No, just, I think it's really important that if you're, going to think about investment property, to get the right advice from the people who are qualified for investments, to understand the cash flow, to understand not just the opportunity but the risks, to look at things like the flooding, the fire risk, the crime rates. I think that's another thing where people are often sold the properties on location. I mean, we've heard all of those stories. Real estate agents are very good at starting with the property and then telling you the story to match whatever it is you want to hear. What we do at Colour Property is quite different, because the property is the last thing that comes in. So the story comes first, and then we find the property accordingly. And that makes all the difference to a good investment and a bad one. And there is nothing more painful than losing a property from, not understanding that, and particularly not understanding the cash flow associated with holding the property. So, whoever you use, make sure that that's a significant part of what it is that they provide.
Exactly. That's really wise words to finish off on, because I think with the market starting to rise, there might be some of that FOMO or fear of missing out happening. So it's good to take an educated step forward with your investment journey, because there's always risks involved, as Susan said. So yes, this is not financial advice in any way, but just a discussion, getting some of this valuable information from Susan who's had decades of experience in the industry. So thanks for joining us if you have today, and we look forward to the next episode of Dreams to Realty.
Thanks, Sage.
Thanks, Susan. Talk soon.
Bye.